Hello and welcome to the CNBC-TV18's Mumbai newsroom. I'm Sonal Bhutra and you're watching Your Stocks. For the markets, of course, 19,000 mark that has been scaled. We've come off from those levels, but still, it is a day of record highs. And of course, we get a lot of queries from all our viewers on this historic day as well. So let's get in experts to answer that for you. Joining us today is Rajat Bose of RajatKBose.com and Sharad Avasthi, Head PCG Research at SMIFS to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us. Well, we have seen stellar moves in last couple of trading sessions. It's the monthly expiry as well today, and we do have a lot of queries coming in from our viewers. So let's get that started. Radhakrishnan V writes to us from Chennai, holds 200 shares of Tata Steel at 118, 100 shares of Tata Consumer at 845 rupees and 120 shares of Tata Chemicals at 1020. Wants to know the long-term view of around 2 years. So all the Tata Group companies is something that he has in his portfolio as well, and decent quantity as well. So Rajat, let me come to you first up. What is your take here? Technically, how are these looking? What are the charts suggesting as well?
Good afternoon, Sonal. Thank you for having me. I would say that to start with Tata Steel, I would say that Tata Steel looks pretty good to me. In fact, I've also given a buy call to my clients as well. Tata Steel, if you are looking at a longer term view, say 2 years, your viewer demanded that. From that perspective, I would say the initial target would be 140. After that, it would be 156, 167 and 203. The first three targets could be achieved within a year's time, and the 203 might take about 2 years or so. Of course, if it gathers momentum, then these targets can be achieved much earlier. The technical chart formation is pretty good. In fact, there is in a rounding bottom or a saucer formation even in Tata Steel, and chances are that we might see this rounding bottom would be completed, and after that there would be good amount of upsurge because the rounding bottom signals further rally. Regarding Tata Consumer, I would say that Tata Consumer really looks good. It has had a good run and now it is moving up. I'm looking at a target of 1020, 1050, and over the longer period, Tata Consumer might actually move up to something like 1255. And Tata Consumer, after having had a good run up to 850, that was later half of 2021, and then it has gone into a consolidation, now moving up. So Tata Consumer is definitely a buy here. Of course, only for those who are buying for the short term, they should wait for a decline, but a long-term investor can definitely buy at current levels. And regarding Tata Chemicals, what I would say is that Tata Chemicals also looks good. It is on a base formation mode, currently about 1000 rupees. I would put a stop loss for this long-term investor at 845, and Tata Chemicals, slightly longer period if one looks at, then definitely there would be a very good opportunity. Initially for say the next couple of years, Tata Chemicals initial targets would be 1129 and 1230, and after that over the say 3 to 4 years it can go from 1350 to about 1400. So Tata Chemicals is also a buy. All three stocks are a buy, and he can remain invested in all the three stocks.
Okay, remain invested. That's the word coming from Rajat. Thank you for your opinion there. Rajat, let me come to you because Sharad, let me come to you. I'm so sorry, Sharad, let me come to you because we do have Tata Consumer in this. FMCG indexes at a record high. We have spoken about how Tata Motors has done well as well. Tata Chemicals, there's this big EV battery chemicals opportunity that the street is waiting some explanation on as well. From a fundamental point of view, how do these stocks look?
Tata Steel, I also think you should continue to hold. We are expecting earnings to be stable around 14-15 bucks. So I think 9 times should be easily available to the company. So not much volatility is expected in terms of numbers going ahead. They should be very flattish in nature. but the valuations are attractive. So I think 9-10 times it could easily trade. So hold Tata Steel for a target of somewhere around 135.40. And for Tata Consumer and Tata Chemical, I think Tata Consumer is a tad on the expensive side. It is trading at somewhere around 47 times. Growth over the next 2 years could be 20-25% CAGR. But 48 times forward, 47 times forward earnings of around 18 rupees is a tad on the expensive side. Some of the segments of the company could do very well over the long term, and that could result in some re-rating. But I think at 47, 48 times, you are largely discounting everything. So Tata Consumer, I would not advise him to hold. I think he can exit. Tata Chemicals, it is roughly fairly valued at 11.5 times. It is one of the largest manufacturers of caustic soda. I think the expansion that they have recently announced could result in 20-25% appreciation or addition to their earnings over the next 2.5 years. Right now, we are expecting somewhere around 85-86 rupees. So Tata Chemicals, I think you can continue to hold for around say 20-25% upside from current prices. Tata Steel, you can continue to hold. Tata Consumer, I think it does not make sense to hold at these prices.
Okay, all right. So that is the fundamental take. Thanks, gentlemen, for that. But let's move on to the next query. S. Kumar writes to us from Tamil Nadu. He holds 1,000 shares of Vedanta at 283 and 10,000 shares of Rattan India Enterprises bought for 38.5 rupees per share. He wants to know whether to hold or sell at current levels. Sharad, let me quickly come to you because you will be able to give us your take on Vedanta. A lot keeps happening in that space for sure. What do you suggest should the viewer do, Mr. S. Kumar?
Yeah, I think for Vedanta, there are a lot of flip-flops happening at the promoter level, the type of debt overhang that they have, and most probably the bonanza that they were getting from the ZL dividends might not happen now in future. So these are the two challenges that they have. But I think most of these challenges are aptly priced in. Earnings are expected to be somewhere around 40 rupees. I think again here you could easily expect it to trade at 9-10 times. So I think continue to hold for a target of 360. What was the other stock?
The other is Rattan India, but I guess you do not track that?
Yeah, I do not.
Yes. Yes, okay. Rajat, what's your take on these two names?
Well, regarding Vedanta, I would say that Vedanta, after a brilliant run up to 2022, say around the current levels, I mean slightly higher than that, it posted a high and after that it went down almost 50%. And then it staged a rally. Again, there was a high around the current levels that is ruling now. This is the third attempt to cross the 280-300 supply zone. Each time you come to a supply zone, you actually absorb some supplies. Of course, if the supply is overpowering, then definitely the stock will go down. But it looks as if that it is just a matter of time before Vedanta crosses 300 and moves further up. So I would suggest a hold, and a stop loss for a long-term investor would be 224. Upside targets are 338, 360 and 390. Vedanta is a patience game. It looks as if that there would be lots of gyrations and then finally the targets could be met. Regarding your the next stock, that is Rattan India, I have no idea about this stock as to what it does and all that. Only the chart suggests that there was a sharp run up in 2021. It shot up from a level below 10 to something like 70 rupees, and after that it is on a consolidation mode, but the consolidation has a bias towards the downside. And its 200-day exponential moving average is about 31, 32 kind of levels. Now it is ruling at 43. It needs to take out 45 decisively. After that, there could be a run up to something like 55, 56. If that is taken out, then further upswing can happen. But if I remember his query rightly, he said that if he needs to get out, that also we should suggest. I would suggest getting out of this stock because fundamentally I have no idea, but technicals are not very encouraging because it is unable to take out earlier highs. So it's better for him to actually exit this stock and concentrate only on the other stock.
Okay, all right. Okay, so Rattan, India Enterprises, you do not suggest our viewer to hold on the positions that they have in this particular stock. Moving on, Apeksha Pereira writes to us from Karnataka. She holds 75 shares of Rain Industries bought at 203 rupees a share. She's a medium-term investor and wants to know whether to hold or exit at current levels. Let me come to you on this one, Sharad, because Rain Industries, the stock did not do so well last year. It's down around 30% from its 52-week high now as well. Quarter 4 did see some recovery, but there are one-offs every quarter in this particular name. How do you look at this stock?
As you rightly pointed out, that the company usually has one-offs, one or the other in every quarter. This is like the mini Tata Motors before the last quarter. So I think capacity-wise and positioning-wise, this is one of the largest companies in the products that they do. So I think that puts them in a unique position. But we have to understand the nature of the operations and the things involved. Firstly, inventory movement has been very haphazard over the last few years. Add to that the currency movement that adds to the volatility in the numbers, and they have a lot of foreign currency borrowings also. On the positive side, I think the size is huge. The valuation they are trading at somewhere around 4.5 times on price to earning, and similar EV/EBITDA multiples as well. So I think that's a comfortable thing to happen. And over the last 5 years, the debt proposition has also improved. Not that the absolute debt has gone down, but in terms of the way the reserve addition has been happening, that is supports your net debt. So right now the debt equity would be somewhere around 1.2 times, which was around 2-3 times around 5 years ago. So that's been positive, and I think the leadership position that they have should help them maintain the numbers. Would not be ideal to look at the company on a quarterly basis, because you could be in for negative or positive surprises on a quarterly basis because of the cross currency headwinds and everything. But other than that, I think gradually they should settle into a trajectory where they should report consistently earnings of somewhere around 40 rupees. And the HHRC project in Europe should also normalize. The Ukraine-Russia tensions have derailed it a bit. So I think 40, and being a leading company, world's largest company in two of its products, CTP and CPC, I think there is a possibility that this could trade at around 8-9 times easily. So hold on to it as a multi-bagger long-term idea. You could be looking at targets of 300-320.
Okay, all right. So that's a target on the higher side. We take that point. We'll do one thing, slip into a quick break. When we come back, we'll answer more stock queries on the other side. Stay tuned for that. Welcome back. You're still tuned into Your Stocks. We still have with us Rajat and Sharad to answer all your stock queries. Let's get started then. Amrit Singh writes to us from Uttar Pradesh. He holds 50 shares of Power Grid bought at 185 rupees and 50 shares of BHEL bought at 55 rupees a share. He's a medium-term investor and wants to know whether to hold or book profits. Rajat, let me come to you. First, tell us what are these stocks looking like if we look at it from the charting point of view?
See, from a technical point of view, I would say that Power Grid is looking good, but then Power Grid being a power sector company, it will move slowly. I mean, you cannot see fireworks happening here. I would suggest holding the stock with a 230 rupees stop loss. It's expected to move off despite the recent fall. What I see is that on the chart, over the medium term, it might scale up to something like 288 to 303. These levels are based on Fibonacci projections. So Power Grid is a hold. A person should continue to remain invested. Regarding Whale, what I would say is that Whale looks, one should get out of this stock. I mean, unless it takes out the range, that is the supply range between 96 and 120, there would not be any major upswing that would be happening in this stock. And lots of people have bought Whale at one point of time, and supply would continue to come in. So my point is that it is better to actually switch to some other stock. Even Power Grid that way would be a better choice. So get out of Whale at the current prices.
Okay, get out of Bhel at the current price. Sharad, what's your take on these two names, Power Grid and BHEL? Of course, government owned, so we do see a lot of, hesitation in buying these stocks. But what is your take?
Yeah, I think Rajat aptly pointed it out that power grid, you can expect it to be a slow mover. Though in the last 2-3 years there have been bouts where it has performed very well, price wise. But I think the amount of expenditure that is expected to happen on the T&D space is going to be very robust over the next 10-15 years. So power grid is one story which we are advising to hold for a 15-20 year kind of horizon. There are some stocks on the list. Power Grid is on that list. It's been on that list for the last 1.5-2 years now. And I think, yeah, while immediately my targets would also concur with what Rajat is saying, somewhere around 280, considering 2 times price to book, because the next 2-3 years, the expectations are very tepid, flat to marginal growth for the company. But it is a 6-7% dividend yield company, and I think with a 6-7% dividend yield, by the time FY24-25 numbers start rolling in, the capex guidance should be much better. Even the company in its recent con call has guided that the capex guidance for FY24-25 might be much higher, because the T&D requirements with green energy and renewable energy coming in, there could be a much higher expenditure on T&D. So I think if you are a very long-term investor, hold on to Power Grid. You have 7-8% kind of dividend yields, and there is a strong possibility that over the next 2 to 3 years, a lot of re-rating can happen to the numbers and obviously the stock target price as well. BHEL, I think hold for targets of around 90 to 100 first up. There is a lot of capex going on in the country, and BHEL obviously does benefit from it, especially on the power side of it. And I think they're also diversifying into other areas which should help them. And being a large agency, that should help. The private sector counterparts are trading at much obnoxious valuations. So I think 30-35 times BHEL could easily get, and earnings re-ratings could be very strong over the next 2 years for BHEL. So I think hold on for a target of somewhere around 90 to 100 for BHEL.
Okay, all right. Thank you for that. To the next query now. Sai Babu Miriala writes to us from Andhra Pradesh. He holds 900 shares of Bharat Electronics at 103 and 750 shares of Finiotex Chemicals at 293 since last 1 year. He's a short-term investor and wants to know at what rate should he sell them. Rajat, your take here.
See, regarding Bharat Electronics, I would say that he says he's a short-term investor, and short-term buying this stock at 114 or so, the stop loss, minimum stop loss is 10 rupees. Better still, it would be 99 rupees, because Bharat Electronics over the long term, even Sharad would agree with me, that long-term prospects are definitely very bright. But if you look at the short term, then I would say that there is every possibility that it tries to move up at 119. There would be supplies coming in. Again, if it were to cross that, 122. So the short term doesn't look very great. But if he can change his time horizon, then had I been in his position, I would have suggested a stop loss of 99. Carry on with it, because it has got a lot of potential. Defense space is looking good. Lots of mutual funds are also picking up defense. Maybe there will be sectoral defense sector mutual fund schemes coming. So BEL has a good prospect over the longer term. And what was the next stock you said?
It was Finiotex Chemicals. Finiotex Chemicals. Rajat, could you find that?
Yeah, I could find out, yes. Finiotex Chemicals, see, it posted a high at around 409 September 2022. And it was a parabolic rise. It was a parabolic rise from, say, late 2020, early 2021. And after that, it showed a sharp fall close to about 200 rupees, and now again trying to move up. There is a possibility that there would be a further fall from the current levels, but then it is unlikely to fall below 240. So 235 stop loss would be a good stop loss. If the investor can wait, then there is every possibility that this will move up again, because the technicals are suggesting that short term looks weak but medium to long term looks good. So it's a hold for the medium to long term if he can actually wait for such time horizon.
Okay, so it is a short to medium term hold period that he's looking at. So, of course, that advice is helpful. But, gentlemen, thank you so much for joining us on today's edition of Your Stocks. With that, we'll take your leave on this edition of the show. But as we do that, we leave you with an important story. The lack of awareness around menstruation and poor sanitation infrastructure can undermine the educational opportunities and health of girls in India. Here's a special report on how Rattan, a leading hygiene, health and nutrition brand, is working towards a future where no girl is held back because she menstruates.
A natural biological process like menstruation can become a terrifying experience for girls due to lack of awareness and access to adequate sanitation facilities. Making significant efforts to enable girls to practice safe menstrual hygiene is Harpic, which aims to impact 15 million students through its sanitation curriculum.
Our vision for 2030 is we are seeing a world where no woman or girl is held back because she menstruates, where everyone can access the menstrual products of their choice. Period stigma is a history. Everyone has basic information about menstruation and how to manage it. Everyone has access to period-friendly sanitation facilities. Hence, we have partners like Gramalaya who have very rich experience on working on the subjects like this. We also think like the information and the curriculum and the delivery mechanism should be science-based and should be science-led. Like we are coming up with a very interesting character of KK Kitanu, which we will be launching with Network 18 soon. And the second interesting nudge what we are using here is something called Neela Jadugar. So we are coming up with a very, very small short stories. We're coming with the STEM education tools for the girls so that they own this whole agenda. They are in the driving seat.
Safe and effective menstrual hygiene management is one of the focus areas for Mission Swachhata or Pani, through which News 18 Network and Harpic are advocating for better sanitation and clean toilets across the country.